I think it's just a combination of a lot of things. First of all, I still think the market's trying to absorb data on the virus itself. We've just got horrible data that's become politicized, and the market can't really figure out when we're going back to work and what's going on. But having said that, the market is trying to find a way to be optimistic, and it hasn't seen enough bad data to really absorb it. And I don't know. I think it's a little bit ahead of itself, but that's okay. We'll see. There's going to be plenty of bad data to come out over the next 3 months.
Yeah, I mean, I sort of argued a couple weeks ago that the Johns Hopkins virus tracker number is the new jobs number because, you know, our health and well-being is ultimately not only the key to everything, but the key to the economy as well, because until people feel comfortable, until they feel safe, they are not going to go back out even when, quote, we reopen. They're just not going to do it, at least not en masse. So for you, Dory, what are you most closely watching right now to kind of give you an economic guidepost, if you will?
Well, I think I've about decided that we can bracket the data, and I think you hit the nail on the head. The personal safety is the key thing. And when Dr. Moynihan came out in early March and said 150 million Americans would be affected and 3 to 6 million dead, the market crashed and everything went south from there. And now we're talking about numbers of 60,000, and yet, you know, half the dead and fatalities, as tragic as they are not even being tested. So, you know, the data is clearly a lot more optimistic than it was in March. And these numbers, I think the market can deal with. And the market's finally saying, you know, hey, let's go back to work. You know, if we lose 600,000 people, you know, a year to heart disease, we either need to close down all the fast food restaurants, or we need to all go back to work. And I think that's what the market's trying to tell us.
Well, it might be, but I mean, stocks go down because people sell. I mean, that's ultimately they go up because there's more buying pressure. I mean, that's really at the base of it, Dory. You know that, and so what is going to get people buying equities again? Because obviously we had a decent little 2-week run last 2 weeks, but the reality is we're still down pretty big on the year. What's it going to take for a next leg higher for equities?
Oh, I think they have been buying. I mean, the market's clearly got a lot more support than I expected to, and especially in techs and some others. I mean, they're not really on sale. You have Netflix at an all-time high, right? So I think people have been buying, and it's amazing how much support there is with the numbers that we have. If you're wondering when we get back to where we were, you know, we're talking about a U-shaped recovery here. So that may take a while, but I think we bounce up and down, you know, kind of where we are here, even down lower over the next 3 or 4 months until we get back to work and get the restaurants full and get the consumer out spending again.